Well, everybody, good morning. Welcome back. Hope you're doing well and staying safe out there in these crazy markets. Happy Tuesday to you. Thanks for coming back to another live stream. I know a lot of you guys are waiting in the lobby every day for these streams, and I greatly appreciate our regular viewers who support the show just by being here. With that said, let's take a look at what's moving here. By the way, I love the Christmas theme. I hope everybody else enjoys the Christmas season as much as I do. I've decided I know what I'm going to, when it comes to gift shopping, what I like to do is I like to generally pick a genre and just gift it to everyone that I can. So this year I'm choosing Nerf guns. And what guy, girls too, but I just know guys because I grew up on playing Nerf guns. What guy doesn't want a Nerf gun to play with? I mean, come on, things are so much fun to shoot around the house and stuff like that. So, was just doing some holiday shopping in the Christmas spirit. That being said, speaking of shopping, people seem to be shopping for the stock market because this thing keeps going up, which is looking solid. We look pretty good. Crypto, a little bit of a bounce back, trying to, could it be an ugly higher low here today? That is perhaps a valid question. You had a really kind of nasty sell off in crypto, pretty much a one-shot move lower. I mentioned on this candle the following day, I said, I think that likely is a potential capitulation low. We may have had a little bit of another attempt to go lower here. I'm very curious to see if the bulls for the crypto crowd can actually get head and shoulders above some key levels of resistance. We had during the Thanksgiving week a bit of a recovery in crypto that was going swimmingly until yesterday's candle kind of wiped out multiple days of gains. The question for crypto is, is the deleveraging concern that's been going around markets, the Japanese 10-year yield skyrocketing, Bank of Japan's going to hike rates, if that story is going to continue to spook markets, it's likely to materialize in cryptocurrency going lower. Let's take a look at that. I'm just curious. These two charts are practically inverted right now. Taking a look at the Japanese 10-year yield. You probably, up until today, you probably didn't catch too many retail crypto traders paying attention to the Japanese government bond yields so closely as they are now. But if you get this thing moving lower, it is probably a very strong tailwind for crypto. And if you have this thing moving higher, it is likely a very not favorable thing for the crypto crowd. Because if you're talking about liquidity conditions, like global liquidity conditions, if you have the Bank of Japan hiking interest rates and working against global liquidity to an extent by making borrowing costs more expensive on the international stage, then what people tend to do is they typically unwind their levered positions. And where people are, quick to take profits or get out of seems to be crypto. It makes good sense. I mean, if you are a hedge fund, a portfolio, and you need to trim up a little bit of positioning to raise cash, most of kind of the risk would be tailored to higher volatility instruments such as Bitcoin. So we're seeing that over the last few months. You've seen, Bank of Japan looks like it's going to hike rates. We talked yesterday in my video that I did specifically about interest rate divergences taking place. If we take a look at interest rate projections, this is looking forward in time at the US versus Japan. And in red, you have Japan, the central bank in Japan, their interest rates, versus in blue, you have the US. Now, what you'll notice is that the projections are for the U.S. to cut interest rates. I think this was made more rapid by the proposed, I don't know why I put the likely next Fed chair, Kevin Hassett. If you watched yesterday's video, we discussed that. Kevin Hassett is likely the next Fed chair. He is a Trump ally. He is likely to cut interest rates in line with the administration's goals. And if that takes place, get ready for rate cuts. And if rate cuts are coming, then the yield offered in the carry trade by selling yen or borrowing yen to go buy US dollar, it erodes a little bit. At the same time, the Bank of Japan is on the precipice of what might be a hiking cycle. Granted, this did happen before the great financial crisis, which is a little bit concerning. And one of the biggest tailwinds or headwinds to markets is global liquidity. Central banks lowering interest rates historically is pretty bullish for stocks if the economies are holding up okay. And the opposite is true for major sell-offs. Rate hikes in the U.S., for example, have preceded many crashes. So it is something to keep an eye on. I don't think the whole world is built on Japan personally. I know that that's kind of an idea that the Bank of Japan is make it or break it for the entire world. I don't know that I would give it that much credence, but I do generally think it is worth watching. And I think that there's a little bit of de-risking taking place in the crypto crowd. That being said, I think tech earnings continue to look really strong. And I think if you get Kevin Hassett in the Fed chair role, and we get a slew of rate cuts next year, that is bullish for stocks. Now you may have your criticisms. You may say, well, hey, that's going to make the prices of things go up. Well, exactly. Stock prices are probably going to go up too. If real estate, if they cut interest rates and everybody floods out to go buy houses and borrowing costs are lower, then guess what? A lot of young Americans, especially who've been wanting to buy homes, will get the chance to do so. And with lowering interest rates, jobs are expected to go up. So if you get people back employed, you have lower interest rates, so people can go out and buy houses. Look, I actually agree with the idea of cutting interest rates. I've talked about that a lot on my channel. The criticisms, I've mentioned those as well. People would say, that's going to make the rich get richer. It doesn't solve our national debt problem, etc. But at this point, I think one of the only ways that the government fixes its debt situation is to outgrow it, to cut unnecessary expenses and to outgrow the debt through economic boom. What I mean by outgrow it is that, if national debt is growing at a faster rate than GDP, then debt becomes more crippling. If national debt is growing slower than GDP, the output of the economy, then the debt becomes more manageable. That's the idea. Now, regardless of whether they are successful in that mission or not, I think stocks will love the added spending that is likely coming. Interest rate cuts, a pro-growth administration, it's probably going to lead to stock prices continuing higher. Trump's first administration, the stock market went up a lot. I'm not saying like, oh, Trump is the greatest. I'm saying stock market, right? The stock market is not necessarily how everyday Americans are feeling. I'm saying the stock market, I think, will continue to go up because there's a lot of pro-growth stuff. There's less regulation with the Trump administration. Their goals with making many pro-growth type moves. And so, I think logically we have a Fed that wants to cut rates and will likely cut rates even more. You have growth in the economy that is outpacing other places and still strong, 4.2%. That is what the Atlanta GDP now has for expectations for this current quarter, 4.2%. Usually the economy grows around 2 to 3. We are above trend. This to me suggests strength for the stock market. This supports stronger earnings for stocks, right? Now, I mentioned in my video yesterday, still very neutral on the dollar. I think you have a mixed bag on the dollar. You have a Fed chair that's going to likely, cut rates, but you have an economy that I think that's going to run hot and inflation will remain sticky. And we also talked about yesterday that even if the Fed chair cuts rates, the long end of the curve is controlled by the bond market, which means the Fed can cut rates, but mortgage rates, they listen to inflation and economic growth more so than the Fed. Now, if you don't, I know that was a lot of jargon, and if you're kind of newer to this stuff, that may have sounded like nonsense, but Basically, the Fed controls short-term borrowing rates. The market controls long-term borrowing rates, right? It's set by the market. It's what what the market deems correct is what the market gets. So when we look at like the 2-year yield, it's very sensitive to Fed policy. When we look at the 30-year yield, it's really sensitive to inflation in the economy, right? In fact, you can see despite the rate cuts, the 30-year yield hasn't moved all that much because it's still suggesting over the long run, it thinks we're still going to get higher levels of inflation. It thinks we're still going to get economic growth. That's kind of what the 30-year yield is suggesting. If you really want to see the dollar truly trend lower, one of two scenarios has to happen. The bond market has to see inflation is going to plummet. And likely what would send inflation plummeting, like truly plummeting, it's not oil prices. Oil prices are always already low. What would send the 30-year yield lower is probably truly recession. But I don't see any evidence of that at this time. Could that come along? Almost certainly. If you say it long enough, you say the U.S. economy is going to go into a recession, you will be correct. The problem is you're going to miss out on 5 years of returns before that happens. Or is it right around the corner? That's the difficulty of this stuff. Nothing is easy to predict about markets. It's actually quite difficult. Anyways, I remain long the NASDAQ. I still like this setup. I think trend is your friend on this one. We hit that 100-day moving average. Technicals look good here for that trade to continue. We actually recaptured the 20 and the 50-day moving average. I think we look constructive. I think your next area, and by the way, guys, this level that we've talked about, right? That 61.8% retracement, we took it over, right? Bulls took it. And so I've made the point on my channel. I'll continue to say it. I think we've recaptured our moving averages. I think path of least resistance for this one is to continue to make that push back to all-time highs. For now, that is my bias. We also have kind of a quiet zone in terms of economic data in the next few weeks, which I actually think also favors stocks moving higher. Typically in cool-off periods or quiet times in economic data releases, we see stocks drift. Not always and not guaranteed. Nothing ever is. Somebody pointed out, they're like, Nick, you said seasonality is going to cause the stock market to go up and it didn't work. And I'm like, well, nothing works all the time in trading. Nothing. Right. So if you have the idea that something should happen to make gold go down or gold up, like it's all educated guesswork. And to throw out the idea that seasonality is useful simply because, hey, it didn't work like it was supposed to. This stuff is hard, man. That's why trading is hard, is because people who they think like, oh, seasonally it goes up, that means it's guaranteed. That's the brain of someone who's still new to this stuff. Whereas someone who truly understands that good trading is like flipping a coin with a 60% probability. 40% of the time, you're still going to be wrong. 60% of the time, you're going to do well. Over the long term, you're going to make more than you lose with a weighted coin. I use that analogy all the time because it's the best way I know how to explain it. Nothing works all the time, and new traders often overestimate how well they or anyone can predict market moves. No one can predict market moves with incredibly high accuracy that can actually prove it. The greatest traders of all time averaged, far less than you think. A lot of times people think like, oh, great traders, they average like, 20% per month, whereas you can pull it up. I mean, go ask your AI, your chat AI. Like, for example, I was looking at stats on some of the biggest trade copying services across the internet. It was like 2 to 5% were like top tier traders. Like the best on the site were averaging 2 to 5% average monthly returns. But people who are new to this stuff, they're not ready for that conversation. They want to continue to believe that 20% per month is what a good trader should yield. And because this story tells them that they can get rich quick, this story tells them that it is impossible to get rich quick. So people who get into trading, they do not want to believe that this is the reality. They are willfully ignorant to this reality. I can show you all the stats in the world. I can show you all the websites that track thousands of profitable traders to see what their average returns are. And people they will completely ignore that because they will say that dashes my hopes and dreams of becoming super rich really quick from trading. I'm going to continue to believe this, blowing every cent I have in the markets because I'm chasing an unrealistic expectation. And then finally, years into your journey, if you make it that far before quitting, you will have to come to the conclusion that all profitable traders do. Slow and steady wins the race. Everyone else blows up. So it's your choice. You choose to accept that now, and you start getting on the compound interest train of many years to come. You'll be continuing to trade slow and steady and build that and work towards generating these kinds of returns. Or you can continue to change. You can continue to chase 20% averages per month and blow up everything you have. That's your choice. Again, I know I'm speaking like super almost in a harsh manner. I'm not trying to dash your hopes and dreams. I'm trying to save you from blowing up a bunch of money. Because from my vantage point, put yourself in my perspective. I have a lot of people who watch my videos, and I'm really thankful for everybody who does. I get so many emails, comments, DMs from people who have lost a lot of money in the markets. And what they typically do is they try to go for unrealistic expectations and they financially wreck themselves. Don't be that person. Listen to what I'm saying now, not later, because most people will blow up their money, learn the hard way, and true intelligence would be to say, okay, fine, let me reevaluate what is truly realistic, because all those Lambo guru course salespeople that you see on social media, they're lying to you. That is not the reality of the trading community that is actually profitable. Those people didn't make their money through trading. They made their money through selling courses. There's nothing wrong with selling something if you have verified results. We sell stuff every day on this channel. We build software tools that help traders to scan markets more effectively. But at the end of the day, I share with you guys my results. I'm not making 100% per month or anything like that. I'm going slow and steady. I've made good money in the markets over the years of doing this. But people who are selling you a dream, they'll never show you their account. Right? They'll never show you their account over a long stretch of time and their true performance and their statistics. Anyways, there's your rant for the day. Just a quick reminder, all the time on my channel, I do it as much as I can all the time to try and help people out who are new to this stuff. Set your expectations at a realistic level and you will actually do much better than the people who are, blindsided by the dream of getting rich quick. And I'm not saying that I'm saying like, everyone kind of gets into this thinking like, oh, how hard can it be, right? 20% per month, that seems reasonable. I'll turn my $1,000 into $100,000, and it's really they turn that $1,000 into zero. So don't be that person. Anyways, Nasdaq still looks good. Dollar index pretty flat on the day. We'll see what happens here. You are coming down to a pretty key area of support. A little bit of a pin bar looking candle on yesterday's daily close for the dollar index. Volatility continues to drop. I'm glad to see this as it does bolster the stock market higher. Look at this. Bitcoin's actually making a little bit of a bounce back here today. I think if you want to see a really solid candle, a really strong candle for Bitcoin today, you'd want to see it actually recapture all of that yesterday's losses. I think that would actually potentially show you might have a really ugly higher low trying to form on Bitcoin. But I'm not buying Bitcoin from a trading perspective unless we were to get a breakout through these highs. Like if you get back above 95,000, I think that looks really good. I think like that from there, I'm like, okay, I think we've actually potentially bottomed, and I'd be looking to buy that higher low, like that third higher low potential. I like that setup. This year, Bitcoin has been I've said it yesterday. I called it a train wreck. I think it really has. It's been a tough year for crypto. We'll see if we can get a late year turnaround. But for now, trying to put in some higher lows here. Ethereum, same kind of concept. Did technically not get back to those previous lows around 2620. Let's see, yields are slightly higher here today. The euro dollar sitting at resistance here around 1.165. Pound dollar coming back into this area. Let's see how this area reacts. This prior level of support turned resistance. I have a small short position on the pound dollar. Let's see if we can get back beneath this. But we'll see. Is there somewhere I can post a question to ask you, Nick? If you are a member in our Discord, at me on Discord. I do pretty good at answering questions in there. But yes, I apologize. It's hard for me to I'm not always great about the YouTube chat. There's a lot of comments and I am still kind of in presenter mode while I am streaming. So what do you think about Bitcoin cycle being in its bear cycle? Yeah, I mean, I know there's like the 1,000 days of bull trend and then 300 days of bear trend. We'll see. I think bigger than those cycles. I think crypto, I said it a lot yesterday. I think crypto is trading in tandem with traditional risk assets. It's not been a great period for stock market returns. Like if you take a look at RSP, right? RSP, this is an equal weight S&P 500. It's been pretty flat. So Bitcoin being down, it does seem a little disconnected to the market, which is kind of interesting. But I wouldn't like say like, oh, Bitcoin is going down because of its, historical cycle. I think much more likely Bitcoin is going down because financial conditions globally, like liquidity stuff drying up from the Bank of Japan. That's a much more real force that I think is like very, very tangible. Bitcoin cycle, that may also be playing a role in some sort of like, like I wouldn't say it's useless to think about that stuff by any means. It's still sort of a pattern. It's a cyclical pattern that is recognizable. But I think that in terms of macro, you have a really strong macro story that is a little spooky to the crypto bulls, which is borrowing costs going up in the global piggy bank, aka Japan. The Bank of Japan has low borrowing rates. People borrow from it. We talk about this a lot on the channel here recently. You're also seeing yen continue to weaken, which is kind of interesting. Like if you're going to see, crypto turn around, I think you want to see at least a little bit of softening up on this 10-year yield for yields. Yeah. Nick, DNA Funded is organizing a tournament. I'm joining just for fun as a swing trader. I'll probably be day trading. I'll probably end up second to last anyways. Have fun with it, Bulent. That's awesome. Yeah, I know they've been doing some tournaments, which I think is a really fun idea. And they've got some cool prizes too. Let's see. What else do we have? So, yeah, like I said, I think if you're getting a bit of an unwind to the carry trade, an unwind to that, crypto's the first one to kind of be like taken off. If you're raising cash for a lot of like managers, portfolio managers, they're just going to probably dip into the thing that is causing the most strain to their margin, to their leverage, et cetera, which is going to be something like crypto, because crypto just moves a lot. It's a highly volatile asset. So if people are like, hey, they're leveraged essentially by borrowing yen, and then yen borrow rates become more expensive, there's a little bit of like, okay, undo some of that. And where do they raise cash? The stuff that's moving the most in their account, Bitcoin. I think that's like a really pretty straightforward, like, okay, that makes sense why people might be. Anyways, crypto is also not following its historical seasonality last 10 years. We've mentioned this over and over on the channel, that typically during this period of time, you see some strength in crypto that has just not been there recently. We've seen, kind of a falling out this year. Crypto seems to be breaking ranks from its seasonal patterns. So we'll see if anything kind of corrects on that, but seems like for now, at least, the divergence from historical patterns on seasonality seems completely out the window. At the same time, you've had some really decent following of seasonality through things like NASDAQ, Let's take a look at gold here. Like gold is actually really following its seasonality really, really well here. The dotted yellow line is historical tendencies for gold throughout the year, right? Pushed higher, moved sideways, pushed higher, sideways, and now kind of having a little bit of a tail end of the year move up. I mean, gold is really subscribing to its historical seasonality. But yeah, it's interesting. By this mantra, gold actually looks like it could have a little strength into year's end, but then look where we are in January, February. This is typically a good period of time in the gold market. And I think with the new Fed chair, who is a straight up dove, like you couldn't have picked a more dovish Fed chair. Rate cuts are coming, and I think that that's going to continue to bolster gold prices higher alongside stocks. I think gold and stocks both look strong going into 2026 for now. And I remain long both. I'm long NASDAQ and I'm long gold. So taking a look at gold here, nice little close above this prior high, right? So you had this close, nice close there. Little bit of a wick on the top here. I wouldn't read too far into that, especially considering how we are trading today. You had a nice reaction off of this area, pushing back up. I would like to see a green bodied candle close. If you got something like this, then that looks really constructive. But I do think I'm actually going to trail my stop. In fact, I need to do that. I'm going to take my stop loss here from where it currently sits. I'm probably going to move it right on up somewhere around here, just behind support. So this past level, I'm looking for this to continue to act as support. That would be a dynamic that I like staying in the trade. If we can't, right, if we start to roll over, some of these wicks are going to turn into heavier selling, I'm just going to take profits on the move. So I'm going to trail stops on gold here shortly after stream. So I'll update. If you're inside of the Discord, I will share, of course, my updates on that shortly. So if I go over to, let's see where we're at. By the way, I did a little bit of a discourse about Kevin Hassett yesterday. That was kind of our commentary and what he means for markets. If you're in the group, head over to Nick's journal where I posted this section here. But anyways, on gold, stay tuned on this. I'm going to probably trail my stop today if you're a VIP member. And I'm also watching silver. So silver had a little bit of a pullback here, but now look at that, recapturing it. Silver looks like a beast, man. Really, really strong move here for silver. And I think an obvious level of support now becomes this prior high. You've got a fib level. I am sure of it. Let's just take a look there. Yeah, look at that 50% retracement. Looks really attractive. Silver looks really good. Silver looks excellent. Really solid overall from a technical basis. And if I take any trades, of course, I'll update it inside of the group. By the way, we had a lot of people join us inside of the or for the Cyber Monday and Black Friday deals. We are going to extend that out to the end of the week. We have people who are still kind of getting their funds together or are waiting for like a paycheck or something like that. So we have a couple days remaining on that. If you want to pick up a copy of Edgefinder, Stockbox, or if you want to join us inside of the VIP group, we are extending that. Like I said, the Cyber Monday, Black Friday discounts, they are 40% off. But for stream viewers right now, last call on this. If you want to get access to the trade alerts being shared, you can see every trade I take. Full transparency. I win some, I lose some. Overall, I've shown my account many times on my streams and videos. So if you're interested in seeing every trade that I take and getting it notified to you, here's 2 quick ways you can get some information on that. Down below, you can scan the QR code below my camera, or if it's easier for you, simply click the link in the live stream chat right now. But again, message in if you have any interest in getting access. Like I said, this is kind of your last call chance to get access to the VIP signals. If you want to get access to Stockbox, Edgefinder, if you want to bundle stuff, if you need a payment plan, just don't hesitate because you'll miss the prices. Those are ending very soon. So come join us. Would love to have you in there for 2026. Like I mentioned, if you ever have questions, people tag me all the time in the trading chat. Please, if you do have a question for me, ask it in the trading chat. That way I can answer it and other members can also read along so we can have conversations. Sometimes people will DM me questions, and I much prefer, if you can, to ask me in the live chat room for members. That way we can have a conversation that other people can also learn from rather than a one-on-one. Just because I do get quite a few DMs per day, and I do my best to answer them, but I much prefer it in the chat so that it kind of helps out. Get the Edge Finder. It's worth it. Thank you very much. Yes. Do not miss it, man. Do not. If you are somebody who's like, I've wanted the Edge Finder for a while, and you're like, I still don't have the funds right now. Listen, message us anyways. Just let us know, and we may be able to set up a plan for you. Like, we had somebody yesterday. They were like, I would love to get it, but I just can't afford it. They messaged in, and then we built them a plan that worked for them. We split it up into a 3-month plan, and they got Edge Finder. And it's like they saved themselves like over $600 by doing that. So message in if you're like, I'm thinking about getting an Edge Finder. It does not hurt to send us a message. We may be able to set up a plan that works for you so that you don't miss it. So there you go. What's up, Daywalker? Appreciate you, man. I hope you get a copy. Side note, that one of the things with the Edge Finder is we've started building this product in 2021. It went public in 2022. We do have plans to raise prices, and that's not a sales tactic. Like, genuinely, we have more costs to the product every year. We add new features. There's more upkeep cost to it. And it is a one-time payment to get access. You don't pay monthly, you just pay once. So there you go. If you'd like to message in, we'll drop that link one more time for you guys. Edge Finder's cool and worth it. Thank you, Joey. Appreciate you, my friend. We have a great community in A1 Discord. Sluggy, it wouldn't be the same without you, my friend. So last call on that. If you have any interest in joining the Discord or getting an Edge Finder copy, send us a message now just to have a conversation with a member of our support staff. They might be able to get something that works for you. Just don't miss the chance, because those prices are ending soon. All right, guys, up next, we have Marco taking over the stream. Stay tuned. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. Let me just share my charts, just a second. So, okay, they should be up. Great. Trading view. So what has been happening today? Well, my watch list is still pretty much the same. NZD USD is starting to recover a bit. It was actually down on the day, but it's starting to recover a little bit. NASDAQ is pushing higher. Silver is also pushing higher on the day. So the same story as yesterday. Pretty much the same story. DXY has sort of rejected the trend line right here. So we had a bit of a rejection of the trend line. Gold pulling back a little bit. Anything else that is super interesting? Well, not quite. Crypto overall, I would say still looking pretty bearish, especially Bitcoin and Ethereum. I'm not sure about other crypto coins. So for the Forex Factory calendar, let's take a look. On Monday, we had the Bank of England, or not Bank of England, the Bank of Japan, Governor Ueda. He was pretty hawkish. So that was interesting to see. Then we had ISM manufacturing PMIs, which was a nothing burger. Today, we had the Bank of England Governor Bailey speaking. Let me see if there was any sort of a reaction on that. No, not quite. I wouldn't say there's anything interesting. On Wednesday, we do have the Aussie GDP, We do have the ADP non-farm employment, ISM services PMIs. Thursday is unemployment claims. Friday, I don't think we're going to get the NFP. So I don't think there will be NFP on Friday, but we do get the core PCE price index. If you're trading the CAD, then the employment change and the unemployment rate will be pretty important for you. For me personally, I was trading the CAD. So I was in a USD CAD position, but unfortunately I did get taken out on that, as you can see right here. So I got taken out for around break even because I did trail my stop loss. So the CAD may be recovering a bit. Canada may be gaining some strength. We shall see. I'll keep monitoring the numbers. I'll keep monitoring the levels. Something that's pretty cool and that's new in the Edge Finder. I'm not sure if you guys have seen it. Just a second. Okay, so I'm not sure if you guys have seen it, but we have the G7 macro matrix. So this is new. Again, it looks at the G7 currencies, GDP growth, unemployment rate, CPI, and the interest rate. Essentially, it tells you which currencies are bullish, which have the highest score, and which are bearish, which have the lowest score. And this is more for long-term analysis. So looks like the dollar in the very long term is performing well, while the New Zealand in the very long term is looking a bit bearish. So this is something that's new. Hope you guys enjoy this. And of course, if I do use this in structuring of my setups, I will notify everyone in the Discord. I just want to compare this longer term news to the short term news. So let's see. The US right now is bullish in the short term. And what about the New Zealand? Bullish as well. Okay, so the short term seems to be equal, while in the long term it seems to be as I just showed you. So I thought that was pretty interesting to see. Something to note as well. I heard Nick talk about it, but essentially there's very likely going to, we already know who is going to be the next chairman of the Fed. So Jerome Powell is stepping down as the chairman. His term is ending and he will be replaced by a new chairman who is pretty dovish. So that new chairman is pretty dovish. I think he's gonna follow what the White House wants him to do, which is essentially massive rate cuts, aggressive rate cuts. So if we go to the Fed watch tool, we will notice that for December, pretty much a guarantee for a cut. And until the December 2026, we should be around the 300 to 325 basis point range. What does this mean? Why is this important for us as traders? Well, it means, first thing, US government has reopened, spending, printing continues. Trump's big beautiful bill coming in 2026, massive spending, massive printing. Inflation is high in the United States. So if we look at inflation, CPI, in the US, it is 3%. So we have pretty high inflation in the States. On top of that, there's going to be rate cuts. So there's going to be rate cuts, and that makes inflation go even higher while it helps the stock market. Now, I just told you 4 major confluences for the upcoming environment. What do these 4 confluences tell you? They should tell you to buy stocks and to buy silver and gold. Okay, both a great hedge against inflation. So I have the Nasdaq on the watch list. I have silver on the watch list, and let's see how things develop. Unfortunately, on the Nasdaq, I'm not in a position right now. I don't really want to get in at this level. And also one more thing, which I may have forgotten to mention, is the DXY is pretty much losing strength. So the DXY is pulling back a bit. The dollar is supposed to lose even more value in December, in 2026, as rate cuts keep piling in. So stocks go higher, silver goes higher because NASDAQ is paired against the dollar, silver is paired against the US dollar. So as the dollar loses value, it gives an even bigger catalyst for these assets to go up. What is the game plan on the NASDAQ for me? Well, I'm not getting in right here. I'm just leaving it on the watch list for now. So I don't really have a clear game plan to enter. We are close to the 20 MA, so that is a good sign. We should also get the Santa rally, or at least it should be an extra confluence for the markets to go up. Santa rally is of course tied with the monthly seasonality. So the S&P November and December, very bullish. NASDAQ, November and December, very bullish. So that is pretty interesting to see. Although this year, seasonality has not been working so well. If you look at the seasonality, especially for Bitcoin, for example, Bitcoin. So November and December are usually the best months, and October. But October was negative, November was negative. Looks like December is going to be negative as well. So this year seasonality has not been working so well. A lot of trading edges that used to work, like interest rate differentials, for example, the interest rate differential between the US and and Japan, it used to be a massive mover of the price of USD yen. Well, nowadays, or in 2025, it hasn't really been the case. If we go to the carry trade scanner, we type in USD JPY. See, this is the interest rate divergence. So essentially, the differential between these two interest rates and the movement of the differential, usually the price follows that movement of the differential. Well, this year, as I just told you, it hasn't really happened. So that's what I see a lot of traders posting online. That's what I see a lot of traders struggling in 2025. The edge that they used before for trading currencies doesn't work so well in 2025. And there could be a lot of reasons, but I would say the main reason is for the new US president, Trump. He kind of came in, changed the whole regime. The dollar crashed a bunch at the beginning of the year. Tariffs, crazy tariffs. So with that sort of a different market environment, a lot of stuff that used to work is not going to be working now. What do we as traders do? Should we cry about it? No, we should adjust and see how we can trade these new market conditions. Of course, a new trading edge that came in is the taco trade, which is Trump always chickens out, which is a great trading edge and a pretty easy way to make money. And also, you can just buy the dip when Trump crashes the market, as he did here. So this crash, for me personally, this crash was one of the greatest things in 2025 because I managed to scoop up the S&P at a big discount. So I got a big discount on the S&P and I managed to get in on some lower levels. So we need to adjust. We need to see how our trade plan can be, let's say, changed, or which trading edges are still working, which trading edges are no longer working, and then we can possibly make money in these new market conditions. What you need to know, I mean, the main point of my speech is that the market conditions have definitely changed when Trump took over. Okay, so let's see some of the comments. Joshua, hello. I'm doing well. Hope you're good as well. Aaron, hello. Welcome. Sluggy, what's up? Can I look for gold sells now? I would not be looking to sell gold at these current conditions. It's just not something I would want to do, especially I would not recommend it to any new trader. Today, the Euro CPI came out. Okay, interesting. At first, prices didn't react much. Then markets appreciated. Interesting. I haven't checked. I haven't saw that because on Tuesday, for my red folder events, we just have Bank of England Governor Bailey. But if we go to EU, let's see, 1 hour chart. Yes, we do have something. Inflation rate year on year. I mean, it's a bit higher. So inflation has went up a bit, but no real movement. I wouldn't say this is a massive move. Hey Bashi, what's up? So Hassett is my cut man. Yes, Hassett is the new guy that will most likely replace Powell. Hassett is a pretty dovish guy, and I think he's gonna follow what Daddy Trump says. So rate cuts are coming. What is pretty interesting as well, current market conditions are pretty similar to 1929 conditions when there was a massive market crash and then the Great Depression. Now, I'm not saying it's going to happen again, but it's just interesting to notice that history does not really repeat itself, but it does rhyme. So in 1929, you also had, I believe, pretty hot inflation, and you had a roaring stock market. But in that environment, the Fed decided to actually cut interest rates where they should have hiked interest rates to make debt more expensive and to kind of tame the stock market, to tame the explosion. And you also had the fingers of many powerful people, let's say, controlling the Fed, controlling what the Fed does, controlling what the president does, advising the president to do some things that were not the best. And there was a lot of insider trading, which is pretty funny to read. So if you have read the book, you would know that back in 28, 29, it was super popular for a couple of, let's say, 10 to 20 huge bankers to gather together and manipulate stock prices and basically pump and dump stocks to retail. So the things that happen nowadays in crypto were happening in stocks like General Electric, if that was a stock back in the day, I think it was. So that's pretty funny to see that pump and dumping was present even 100 years ago. Can I have an update about US 30? Yes, sure. Gold. Marco, where are you from? I'm from Croatia. Pound dollar. Balkan brother. Yes. A distant land. Belgium, but I live in Bulgaria. Why would you move away from Belgium to Bulgaria? But maybe Bulgaria is nice. I have never visited. Belgium, I've visited a couple of times. It's a beautiful, beautiful country, except Brussels is like ran over by criminals. So I don't like Brussels, but I like Belgium. I didn't expect anyone from the Balkans to be there. Beautiful country. I drove from UK to Germany, went to the Nürburgring. That's pretty cool. UK sucks. I agree. Been there as well recently when coming to Bulgaria. Okay, this is just not market related. Let me see. What do we have in terms of the markets? Pound Swiss. Okay, sure. Dražen Petrovic is from Croatia, isn't he? Yes, he's from the same city as me. When will the COT report be up to date? I'm not sure. There's a bit of a different release schedule for the COTs. I think we have it here. So if you go to your Edge Finder and you go to the institutional COT, you get a link here. Government shutdown update, Covenant of Traders publication schedule. You click that. Come on. This is it. So essentially, this is the new schedule. So as the COTs keep coming out, the new published date, that is what you should watch. So the next one, I'm guessing, is on the 19th of... No, sorry. The next one will be today. It says 2nd of December. So yeah, this is your new published date. I do want to take this time to mention the sponsor of today's video, which is DNA Funded. So if you guys are looking to expand your trading capital, get more capital, because that's one of the main issues that traders face in the markets. They have very little capital, 5 to 10K. You can't do much with that. So if you want to expand your capital, you have a good trading edge, we highly recommend you try out DNA Funded. So it's a reliable prop firm. They're being ran by professionals. It's not some kid in a basement. And with our discount code A1Live, you get 25% off any challenge. So 25% off any challenge. This is a code specifically for you guys watching the streams. So usually the discount code is 20%, but this one is 25, just for the stream viewers. This, by the way, is my challenge. Phase 2, 50K. I'm trading this challenge solely using ChatGPT, trade signals from ChatGPT. I'm doing it as a challenge for my YouTube channel. So it's not like I'm putting massive amount of money into it, but I think it's pretty interesting to see that this challenge is actually up around 2.5% right now. So I just need 2.5% more, and then I'll pass phase 2, and then I can potentially hunt a payout. So we will see how it goes. Make sure to check out DNA. I love the company. I love the prop firm. I didn't have any issues. They're using TradeLocker, which is the best software I've used for execution. So yeah, definitely a great prop firm. Let's see. Italy is the worst country to live. Don't like they don't allow a trade copier on MT5 once funded. Are you talking about DNA? They don't use MetaTrader. They use TradeLocker. So we had gold and we had pound Swiss. Let's do gold. As far as gold goes, fundamentally, I'm bullish. I'm definitely bullish. Edge Finder. Let me just open it up. I believe the Edge Finder is bullish as well on gold. Let's see, gold. Neutral, but it was bullish at the beginning of the week. So it looks like we went back to neutral. I told you like 4 or 5 reasons why inflation is probably going to skyrocket in 2026. So I believe to protect against inflation, gold will just skyrocket higher as well. I do want to buy. My focus is more on silver, if I'm being honest, because it has more explosive price action. You also get a pretty clean cup and handle pattern, but gold is good as well. So I do like gold. We are close to the 20 MA. Not a bad place to get in. I'm not getting in right now, though. Maybe if the Edge Finder goes back to being bullish, gives me a bullish reading, or silver pulls back. I prefer silver, if I'm being honest. I think silver is a bit more volatile. There's a bit more upside potential on silver. So if we do reach, let's say, 54 level, or we get close to the 20 MA, or the 20 MA starts catching up to here, and let's say that we start to pull back like this, I'll get in. That's the game plan. So I prefer silver, but I think gold is pretty good. This is not a bad level to get in. I would prefer for us to pull back closer to the 20 MA. So something like this. But it's still an okay play. Still a pretty high probability trade. So GBP CHF was a request as well. Let's see the Edge Finder. GBP CHF. Very bearish score. I do like selling the pound. I'm pretty bearish on the pound. I think it's a good play. I think the pound right now is one of the weakest currencies, if not the weakest. I would say it's actually probably the weakest currency. They released the budget. It was a nothing burger. So the UK budget, autumn budget, it was just nothing that's going to save the country, basically. So I'm bearish on the pound. For the Swiss, I don't really have a clear view. Let me see for the short term. What do we have? Swiss. CH 50-50, not the greatest result. The G7, Swiss. Okay, we don't have the Swiss in the G7. But I think there's better currencies out there. I think pound Aussie is better. I did try to take a stab at pound Aussie, and I just got taken out, unfortunately, before the price continued lower. So looks like my entry was incorrect, but part of the game. So if you want to do something with the pound, I think selling the pound Aussie is pretty good. This level is not so bad. We are still close to the 20 MA. I did get taken out, so I'm not really looking to re-enter, but I don't think it's a bad position. And the reading on the edge finder for GBP AUD is pretty drastic. So very bearish. Reading score is -21. Just everything is red. Everything is red except the PCE. I don't think I've ever seen such a low score. So this looks pretty enticing, pretty interesting. But just because of the score, I'm thinking about getting in. It may make sense to get in with a small position. If we can pull back a bit to the 20 MA back to the 20 MA, you know what? Let's put it on the watch list for now. Let me think about it, because this score is pretty healthy. Definitely pretty healthy. So the currency that I would love, that I love now the most for the pound is pound Aussie. Can I use the DNA trade locker on my phone too? Yes. So there is a mobile application as well, and it works great. And the risk calculation is built in. So with MetaTrader, you first have to go to a position sizing calculator, which takes a lot of time and creates a lot of, let's say, complicated processes. But with Trade Locker, you have a position sizing calculator built into the software, which is a big time saver. That's one of the top things why I love Trade Locker. Can anyone suggest some broker? So if you go to A1 Trading brokers, you're going to notice the best brokers that we recommend. So just type A1 Trading brokers. Let's see. Pound Aussie has a -20 score. Never seen such a low score. Yeah, me neither. Technicals aren't the best for now. They're not so bad. I mean, we're definitely trending down. We are below the 20 MA. So I wouldn't say that the technical analysis here is super bad. I think it's pretty good. I think there's quite a lot of room until the next support level. So I think if you wait until this support level, that could be a pretty good play. Again, there's quite a lot of free room to that level. So that's nice. Pound yen, GJ, okay, sure. Are you running any challenges? Yes, I have 2 FTMO. I have a live FTMO account. I have a 100K stage 1 FTMO account. I have a stage 2 Alpha Capital account. No, is it the funded Alpha Capital account? I don't remember. Yeah, I think it's a funded one, but it's in drawdown. And I have a DNA funded account, this one, which is just for testing ChatGPT. So, yeah. Mark, I caught the pound Aussie on the gap fill. See? Here on the gap fill. Whoa, that's amazing. That's an amazing entry. That's amazing. So, congrats on the entry if you got in on this gap fill. GJ, yes, sure. GPP, JPY. I like MetaTrader as well, but just why don't they build a risk position calculator inside of the actual software? Because it takes so much time, especially when I'm on the move, when I'm not in the house. It takes so much time for me to open my phone, then go to the position sizing, then do that for all of the accounts that I have. I do have a trade copier, but for some accounts, it's not allowed. I wish they had a position sizing built in. Okay, so GJ. Story with the yen. Apparently, there's probably going to be a rate hike for the yen, which should make the yen gain value. If we go to the edge finder, GBPJPY, let's take a look. Neutral score on GJ, which makes me a bit less interested, if I'm being honest. Let me see what UJ is doing, USD/JPY. Okay, still in an uptrend. If you're long GJ, I wouldn't. I think both currencies right now are not the best to buy. I'm definitely bearish on the pound, but as far as the yen goes, I'm not 100% sure. I was bearish. Now with this possible rate hike, I'm neutral, maybe even bullish, but GJ is not something I would like to trade. There's technical analysis. There's still a big uptrend, still crushing higher overall. If I would do something, it would be a short. So I would sell GJ. I wouldn't want to look to buy because I would not like to own the pound right now. But again, maybe UJ can continue higher. I don't think I have a big edge on the yen right now until there's a bit more clarity. So I'm waiting for some more clarity on the yen, and then maybe I can take a look at some yen pairs. Overall, it's going higher. Pretty much every single yen pair is going higher. So EJ, AJ, NJ, UJ, GJ, all of them are going higher while the yen stays in sort of a limbo mode. So yes, the new prime minister is dovish, but then the governor Ueda is hawkish, saying we're going to do a rate hike, possibly even in December. It's a mixed bag. I'm leaving it alone. So that's about it from me for today. You can catch me every day this week. I'll be streaming. The schedule is right here. So if you go to A1 Trading live stream schedule, there, you're going to find the schedule. Okay, so I'll be streaming every day. Thank you guys very much for watching. The quickest trade I may take, I'm not sure. I do have an NZUSD buy position, which is running in a little bit of profit. I would like to get in on a metal, if I'm being honest. I would like to get in on silver or gold. I think that is the next logical step. But anyways, thank you very much for watching. See you tomorrow, and good luck in the markets.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.